When people talk about British tech companies, they usually imagine something very simple. A company founded in the UK, run in the UK, owned by British investors. But the reality is far more complicated. Because when you follow the money behind the UK's biggest tech companies, you start discovering something unexpected. American venture capital funds, Middle Eastern sovereign wealth funds, Asian investment giants, private equity firms, and sometimes companies that were once British but aren't anymore. In fact, many of the most famous UK tech companies are no longer majority-owned in the United Kingdom at all. So the real question isn't just how big the UK tech industry is. The real question is, who actually owns it? Today, we're going to break down the hidden ownership structure of UK tech and explain how global capital quietly controls some of Britain's most valuable technology companies. And by the end of this video, you'll understand something most people in the tech world never realise. The UK may build incredible technology, but the ownership story is far more global than most people think. Section 1. What ownership actually means. Before we look at specific companies, we need to understand something important. When people say a company is British, that can mean several very different things. A company can be founded in Britain, headquartered in Britain, listed on the London Stock Exchange, employ British engineers, or develop technology inside the UK. But none of those things actually determine ownership. Ownership is determined by equity. Equity simply means who owns the shares of the company, and those shares can be owned by founders, venture capital funds, institutional investors, private equity firms, sovereign wealth funds, or even other technology companies. And once a company raises external funding, which almost all technology companies do, ownership becomes distributed across many investors, sometimes across dozens of countries, which means a company can be founded in London, run from Cambridge, employ thousands of British engineers, and still be majority-owned by investors in another country. This is extremely common in the global tech industry, but nowhere is this more visible than in the United Kingdom. Section 2. The global nature of UK tech funding. The UK has one of the most active startup ecosystems in the world. London is consistently ranked as Europe's largest technology investment hub. Billions of pounds flow into British startups every year. But here's the key detail many people miss. A large portion of that money does not come from the UK itself. Much of it comes from American venture capital firms, global technology investors, international pension funds, sovereign wealth funds, and multinational private equity firms.
Why?
Because the UK is seen as one of the best places in the world to build technology companies. It has
world-class universities,
highly skilled engineers, strong legal frameworks, deep financial markets, and access to global investors. But when global investors provide the capital needed to scale companies, they receive ownership in return, and over time those ownership stakes can become very large, which means some of the most famous UK technology companies are actually owned by a complex network of international investors. Let's look at some real examples. Section 3. The ARM example. Perhaps the most famous example is ARM. ARM designs the microprocessor architecture used in billions of devices worldwide. Smartphones, servers, embedded systems, automotive chips. Even many modern data centers rely on ARM technology. ARM was founded in Cambridge in 1990. For many years it was considered one of Britain's most important technology companies. But in 2016 something major happened. ARM was acquired by SoftBank, a Japanese investment giant. The acquisition was worth roughly £24 billion. That meant one of the most strategically important technology companies ever created in the UK became owned by a foreign investor. Later, SoftBank attempted to sell ARM to Nvidia. That deal was ultimately blocked by regulators. And today, ARM is publicly listed again, but its ownership is still distributed across global investors, including institutional funds from around the world. ARM is still deeply connected to the UK. Its research roots remain in Cambridge. But its ownership structure reflects something much bigger. the globalization of technology capital. Section 4, venture capital and UK startups. Now let's look at another major ownership force, venture capital. When startups grow quickly, they usually raise multiple funding rounds. Seed funding,
Series A,
Series B, Series C, sometimes even more. Each round introduces new investors, and those investors receive shares in the company. Many of the largest venture capital firms investing in UK startups are based in the United States. Some of the most active include Sequoia Capital, Andreessen Horowitz, Accello, Lightspeed, General Catalyst, Ingex Ventures. These firms manage billions, sometimes tens of billions in capital, and when they invest in promising UK startups, they often take significant ownership stakes. For example, many well-known UK tech companies have raised funding from international investors, including American venture funds, European investment groups, Middle Eastern sovereign wealth funds, Asian technology investors. This is not unusual. It's simply how global venture capital works. But it means the ownership of successful UK startups often becomes international very quickly. Section 5, sovereign wealth and tech ownership. Another powerful force behind tech ownership is sovereign wealth funds. These are investment funds owned by national governments. Some of the largest sovereign wealth funds in the world manage hundreds of billions of dollars. Examples include funds from Saudi Arabia, the United Arab Emirates, Norway, Singapore, Qatar. These funds invest globally in infrastructure, energy, real estate, and increasingly technology. Many sovereign wealth funds have invested heavily in global technology companies, and the UK tech ecosystem has also attracted significant sovereign capital. These investments help startups grow faster. But they also mean ownership becomes even more international. A company might be founded in London, but its investors could include capital from 5 or 6 different continents. Section 6. Why the UK attracts global capital. So why does so much global capital flow into UK tech? There are several reasons. First, the UK has one of the world's most mature financial ecosystems. London remains a major global financial centre. Second, the UK has exceptional research universities. Institutions like Cambridge, Oxford, Imperial College and UCL produce world-class engineers and scientists. Third, the UK legal system is considered highly reliable for investors. Strong corporate law and investor protections make international capital more comfortable investing in British companies. And finally, the UK serves as a bridge between Europe, the United States and global markets. For investors looking to fund European technology companies, London is often the first place they look, which means UK tech companies often grow with international backing from the very beginning. Final section, the real ownership story. So who really owns the UK's biggest tech companies? The answer is surprisingly simple. The world does. The UK remains one of the most powerful technology creation hubs in Europe. Its engineers build globally important systems, its universities produce groundbreaking research, and its entrepreneurs create companies used by millions of people worldwide. But the ownership of those companies often reflects something much bigger. The global nature of modern technology investment. Capital flows across borders. Investors fund innovation wherever it appears, and ownership becomes distributed across international markets. Which means the UK tech industry isn't just a national ecosystem, it's part of a global technology economy. And understanding who owns these companies is really about understanding how modern tech capitalism works. Because in today's world, the most important technology companies aren't owned by a single country. They're owned by a global network of capital.